What is going on, everybody? Welcome back to the channel. And in today's video, I wanted to give you guys a little bit of a deep dive on Bitcoin as Bitcoin continues to plunge to the downside, now sitting about 30% off its all-time highs. Now, obviously, we have been warning about a lot of the similarities that we've seen between the 2021 cycle and the current cycle we're in right now. And I'm not here to spread fear or anything like that, but obviously, we have been talking about a lot of this stuff for quite some time, and we have seen this massive drop to the downside. And to be honest, guys, the charts are not looking too good. Is there a chance for Bitcoin to get saved here? All I'm going to do is present you guys with the information. I have no emotional bias. I only trade the charts in front of me. So you guys are only going to get raw information in this video, as you do on every live stream. So without further ado, let's go ahead and jump on into the charts. Let's get into it. So guys, here we are on the Bitcoin chart. And of course, Bitcoin is continuing its absolute meltdown here, sitting at about $88,950 currently. Now, if you guys have been watching the channel for any amount of time, you will know we saw the initial breakout of our range where we were looking for retests of these structural highs and even this $108,000 value area low. Once we got the initial breakout, our thought process here was it would be okay to retest the structural highs for new all-time highs, or even come down and retest the value area high for new all-time highs. And we actually got both of those to play out perfectly. But we knew that once we broke down below this $108,000 level, we would very likely get accepted back into our lower value and see the continuation of this larger downtrend into the value area low of the range. And this level became so important because after we started putting in these new all-time highs, we were coming up to what we would expect to be the end of the 4-year cycle. We had this 1-to-1 time fib on about October 20th here of this year, indicating a massive pivot in the market and also showing us that we are coming close to what we would expect the end of the cycle to be. That same 1-to-1 time fib was almost exactly where the high came in 2021 off of some very specific bearish confirmations, which by the way are all looking very similar here, and I'm going to bring those up in a minute. But just to break down kind of my thought process here was like, hey guys, we got the all-time high, but we knew once we broke below that $108,000 value area low, we would very likely get accepted back into this larger area of value. And we know once we break into that range and can't get out, the likely scenario is that price will fill this range in full down to the POC and the value area low, where I was presented with a lot of questions about what it would look like when we got down here, and if we came down here, would it be possible to just retest some macro levels and Fibonacci retracement for a higher low and a higher high to come in. And of course, once not only did we break down below that value area low, but the reason this started to look really concerning up here in the $108,000 area was because we had all our higher time frame money flow coming out. You could see the 2-day money flow was tanking to the downside here, indicating not only that we would get the drop down, but the trend would continue. Break below the value area high, you're looking to fill that range in full, and you have your 2-day money flow crossing into the red, which would indicate from that point you were going to be looking for lackluster bounces, lower highs, and lower lows to come. And that is exactly what we've seen play out here, all based off the charts. No emotional bias, no fear, no greed, no senseless hopium, just simply based off the charts. And I'm not going to lie, guys, as I've been presenting these bearish cases for the past about month and a half, it's been really difficult, right? Because you get a lot of pushback. People don't want to hear the price might go down. But when it's on the charts here, I'm really happy that we just stick to the charts and stand solid in our sentiment here, looking for that continuation, because it's not just based off nothing. And I'm happy for the TA to be wrong. As a matter of fact, I would pray for the TA to be wrong. But of course, I am always going to be making my decisions based off the TA. So a lot of people ask me if we get down here, like what could be the case for a new all-time high, which I was forced to kind of bring up. Well, hey, if we get this full fill of the range and we're just starting to get a 2-day money flow crossover, if we get down here, I have to assume that at that point, the 3-day money flow crossover is probably crossing into the red, which is an even higher time frame signal that a higher time frame downtrend can continue. And these are all very similar signals that we saw in the top of 2021. So I said I would make this video once we got down to these key levels, and here we are with the same sentiment, right? We expected this money flow to be in the red, and it's really hard for me to build out a case where we're just going to bounce up here and put in a new all-time high. And as I mentioned, right, once we get down here, if that money flow is coming out, it looks more and more likely that the top is in here at $126,000. Now, I can't say that for certain, of course. I think it is important to understand both sides of the coin here, but when the charts are all pointing down, you know, it is very, very concerning at this point in the cycle. So there's the local update there, guys. We're at support. Money flow is just starting to cross over into the red as we expected. Sure, we can get retracements, but I am still going to be looking for lower highs and lower lows because of these high time frame bearish confirmations. Now, that's not to mention also that we lost the 50-week moving average and closed our first weekly candle down here last Sunday, which has always been an indication that the top is in on Bitcoin, right? There's your weekly candle closure. You get a little retracement. Eventually, you lose it, and there has not been one time on the chart where we have been able to reclaim this after losing it this late in the cycle. And the timing will all make sense when we pull up the cycle chart, but you get to see why this is starting to look very, very sketchy, right? It's not just the bearish signs that we're seeing. It's not just the timing of the cycle. It's all this stuff put together, right? We're late in the cycle, top almost coming in, very similar to what we had back here in 2021. And then you lose that 50-week moving average, and the bear market follows. And here we are, losing that 50-week moving average. We held it here, we held it here, we held it here, and we are now closed that weekly candle below. So unless we can reclaim that 50-week moving average and this value area high aggressively, it's very hard for me to build out a case here for a continuation up. Hopefully we can get the retracements. I don't know if they're going to come in, but hopefully we do have some kind of relief to come in here at some point. But again, like even then, this would not invalidate any of the bearish confirmations. So now let's go ahead and dive over into the cycle chart here, guys. So on this chart, if you've never seen this before, I just have the key dates marked off on the chart here. We have the halvings. I have a lot of different measurements here, and it just kind of gives you an idea of what these cycles have looked like in the past. And we had one very important level here, which was the 1-to-1 time fib here, sitting on about October 20th. And these time fibs do oftentimes indicate massive pivots in the market. And this is one of the big things that we were looking at, saying if we were going to get a massive drop down here, it might be happening on around this 1-to-1 time fib. And it is this 1-to-1 time fib is exactly where the top came in 2021, off of almost all of the exact same bearish confirmations that we had back here. They're all popping up back here almost at the exact same time, and it starts to become very, very concerning. So when we look at this from a timing perspective, the things that look very worrisome, guys, is if you measure from any important times. When we look at the halvings to the tops back here in 2013, Bitcoin was a little bit of a different animal back here, but we had 364 days from the halving to the top, and then in 2017 we had 525 days from the halving to the top. 2021 we had 546 days, and from the halving to our current top here in 2025 is 532 days. This is eerily similar. Really not even that far off the 364 days, but you can see how closely this is rhyming with the previous cycles here. 525, 546, 532, and that is just from the halvings to the tops. If we also measure from cycle top to cycle top, you could see here from 2013 to 2017 was 1,477 days. From 2017 to 2021 is 1,428 days, and from 2021 to our current top here is 1,421 days. So the timing of the cycle is definitely saying that we are coming up to the end here. And of course, we've been talking about this forever on the YouTube channel, on the live streams and the market updates, etc. But this is just some of the things that are looking very, very similar to the previous cycles, which of course, when we see those bearish confirmations I'm about to bring up, popping up this late in the cycle, it makes me much more concerned than I was back here and back here. A lot of people were concerned up here with the weekly bearish divergences because it did look very similar to 2021. And my answer to those questions was simply, yes, we do have the weekly bearish divergences. Yes, I do think we will get a drop to the downside, but no, I do not think it will be the bear market. And part of the reason for that was the fact that we did have a lot of time left in the cycle, and we also had the signs on the chart, right? Once we got these massive daily bullish divergences down here, our money flow came back up into the green. It was very likely that we were going to see the overall continuation of that trend. The money flow is always going to indicate the longer term trend, especially on the daily and up, and we did end up seeing those new all-time highs come in. But now that we are much further along in the cycle, and we now have much bigger, more aggressive bearish divergences forming at this particular time, it becomes a lot more concerning, right? So we check off some of this stuff from a timing perspective, measuring from like any major peak to peak or having to top or whatever it is, right? Measuring between any significant point in these cycles are very, very similar. And these cycles have repeated very, very similarly. And you also have the stock market arguably massively overvalued. We have no money printing or anything like that. Now that could be coming down the line. That's for another video. But just from this standpoint, guys, it is looking very, very concerning here. Now, I do want to go over some of those bearish confirmations that we've been looking at. And of course, we have massive bearish divergences forming here. So if we look back at 2021 when the top was coming in, again, we were about 1,428 days away from the previous top. We started to see these massive weekly bearish divergences with our higher highs on price action, lower highs on our momentum waves. And this, of course, was also popping up on the 2-week. There's your higher high, your lower high. And we also had it on the monthly here with our higher high and our lower high. When we come over to our current price action here, you can see very, very similar similar signals with our higher highs on our price action, our lower highs on our momentum waves, giving us that weekly bearish divergence. And of course, this is also on the 2-week and also on the monthly. So we literally have almost every single other technical bearish confirmation here, and that's not even bringing up the money flow, which also looks very similar. One of the earlier warning signs was that 5-day money flow crossover. Remember, guys, the money flow always indicates the longer-term trend. Of course, it doesn't mean that you can't get bounces, but anytime you're looking for these bounces, even if you have the key level of support, just like we did back here, is it a high probability to put a higher low in on this Fibonacci retracement for a new higher high? Well, not really. At least that's not what we were looking at last cycle, because we had our money flow coming out indicating that the trend would much more likely give you lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower high, lower low, lower high, lower low, giving you the overall continuation of the trend. So when I look at Bitcoin holding into some of these key levels of support, I have to look at it exactly the same. And this has been my exact sentiment that we've covered on the live streams, right? Like, sure, we can come into support. Sure, we could see bounces, but if that money flow, look at our 5-day money flow here. Our money flow has just crossed over into the red. And if back here, this was indicating, and many other times, right, if you backtest this at any point, right, like even here, money flow crosses over into the red on the 5-day back here in 2018. What happens, right? Well, sure, you get a bounce. Maybe you had some support, but you get a lower high, lower low, lower high, lower low. So just like I said on the live streams, it's like, well, if we get down here and this money flow does continue out, I have to be looking for the same thing. And this late in the cycle, it does look more and more concerning that the top is in on Bitcoin for lower highs and lower lows. And with a 5-day money flow crossover, of course, those big bearish signs on the high time frames can cause massive drops to the downside. So from a timing perspective, it's almost exactly the same. From a bearish technical confirmation standpoint, it's almost exactly the same. And even if we take a look at the 2-month chart here, guys, this is something interesting that I've been looking at. The 2-month chart, if we take a look at this, almost every single 2-month red dot has indicated a bear market. The 2-month red dot here in 2017, the top was in. The 2-month red dot here in 2021, although we did come up and put in a little bit of like a inflated dead cat bounce to put in a numerical new all-time high. You guys know I'm in the camp that the first high in 2021 was the true bull market top, which was also marked off by a red dot on the daily, right? All we did here was come back up and sweep the highs, right? We didn't come in for a massive new all-time high. And you can see here, we have recently confirmed our 2-month red dot here once again. Literally right on time, right on that 1-to-1 time fib. Very similar. So when I look at this stuff all together, guys, it's just very hard, right? And as we look at our weekly money flow, guys, this is one of the big signs that we look at to really indicate that the bear market is truly here. You can see the weekly money flow crossover right here indicated the last retracement before the massive drop to the downside. In 2017, of course, we had the weekly money flow here before this 55% drop back down to the bottom of the bear market. And even back here, when Bitcoin was a completely different animal, we even got that weekly money flow crossover to give you the massive drop down to the bottom of the bear market. So when we look at our weekly money flow here, you can see it is starting to come out very aggressively. Now, it's not there just yet, but again, right, if we are going to see the 5-day, the 3-day, the 2-day money flow crossovers continue us down, by the time we get down to any significant support, you're just going to start putting in this money flow crossover into the red, which would indicate a lower high and a massive lower low. So these are some of the very, very concerning things. I've been talking about this on the live stream for quite some time. And again, I hate coming up here and showing the bearish case, but I just know a lot of people are out there just pushing the bullish narrative, trying to get as many views on their videos, trying to get the likes, trying to tell people what they want to hear. And, you know, I kind of have to be the guy that I'm a slave to the charts. I just have to point out what is being shown to us on the charts. And it has been looking bearish pretty much ever since the last all-time high. Once we saw those high time frame money flow crossovers, and of course, being this late in the cycle, it does start to get a lot more bearish. And just from a psychological standpoint, of course, we don't have any euphoria up here, but that does not mean that the top just can't come in because there's no euphoria. The one thing I will say is similar to what you would expect when a new all-time high is not going to come is back here when we were expecting new all-time highs, nobody really wanted to hear it, right? It was almost like people were getting mad that we were looking for bounces here. They were thinking the bear market was starting. And then even here, right? Everyone is very scared. Everyone is panicking. I was getting text messages from my normie friends and family. Oh my God, is this the bear market? What is going on? I just bought in. What's happening? And we were looking for new all-time highs, right? And now at this point, this late in the cycle with all the bearish confirmations, you know, it seems that everybody is upset now that we are looking for further downside, right? So it's like when price bounces, people are upset that you're looking for a bounce. And when price is very likely to go down, people are upset that you're looking for it to go down. So you do kind of have like the masses going against the charts, which is, you know, a very typical thing that you'll see. You know, at this point, guys, if I could come up with any kind of bullish case, I would like to see if we can get some kind of a retracement to come in here. Hopefully that can help out the altcoins a little bit. But I just can't come up with a thesis here to look for massive new all-time highs unless it just happens out of nowhere, or if we could see all this money flow turn around very aggressively. But, you know, we've already gone down to key support. And I know a lot of people are looking at the fact that we have not broken this low, which is definitely true, right? This is, you know, market structure 101. You know, could still technically put in a higher low here. We do have the 786 coming in here at about $85,500. So could you put a higher low and a higher high in there? I mean, it's definitely a place where you can look for a higher low and a higher high. But at that point, guys, with all this money flow coming out, it's very unlikely in my opinion, right? It's like the same thing here. We had the Fibonacci retracement. You had money flow coming out on many different time frames. You can even look at the 3-day, right? 3-day money flow was already in the red here. I am never looking for massive higher lows just because you have the support there, right? Like your Fibonacci levels are eventually going to get broken through, right? The uptrend's not going to continue forever. And that money flow is oftentimes an early signal to look for when those Fibonacci retracements are not going to hold up, right? We did have the money flow holding up back here. We got the higher high, but it is not doing the same thing here, guys, if I'm being totally honest. So for a high probability, higher low and higher high, we would want to see a big red wave crossing into the green. This is not what we have right now. We're just starting to cross into the red. So I would be concerned. Again, it's not that, if we are going to get any bounces off these levels, I would be looking at them as retracements. I think that's the most bullish case that I can look for right now. But again, that is just going to be looking to end in a lower high and a lower low. So I hate to bring this stuff up, guys, but hopefully just showing you the reasons, right? The actual reasoning behind this. This isn't just like Bitcoin has to go down because of the 4-year cycle. It's all this stuff together. It's the timing of the cycles. It's the timing from the tops to the tops, from the halvings to the tops. It's the money flow. It's the bearish confirmations. And of course, the fact that you're coming up to what you would think is the end of the cycle. Of course, based off the 4-year cycle, 2026 would be expected to be a bear market year. Now, will that be a traditional 70%, 80% drop to the downside? We'll start looking at the targets a little bit later when it becomes a little bit more relevant. Maybe we wind up going into 2026 and we get a little bit of a muted bear market, right? You don't have all the retail panic selling up here. Maybe you can argue that institutions will help prop it up a little bit as well. So maybe the drop can be a little bit muted. Maybe it's not a traditional, 4-year cycle bear market, and then they start printing money. And of course, if they start printing money, that could very likely change the situation. And maybe then we see something different happen. But, even if they are going to start printing money eventually, when exactly that's going to happen is a little bit hard to predict. And even if they are going to do that, right, if they're not going to start aggressively printing money in the next month, well, these bearish signs could still easily play out for some more downside until that catalyst actually happens. So if I had to make a case for the bears here, guys, it is that it does look very likely that Bitcoin is probably topping here. You have the bearish confirmations, technically. You have the money flow coming out. You have the timing of the cycles lining up almost perfectly. 2026 is expected to be a bear market year. You have the 2-month red dot printing. Everything is just lining up perfectly. Now, it doesn't mean something different can happen. Of course, if they start aggressively printing money, this could change things potentially. But again, predicting exactly when that can start is very difficult to do, and I am just always inclined to pay attention to the charts here, and hopefully this is very clear to you guys on the live streams, being very, very explicit about losing this $108,000 level this late in the cycle being a very dangerous case, and of course, losing the 50-week moving average this late in the cycle, also a very bearish sign. We have a lot of work to do to get back up above here before the weekly candle closure on Sunday. So many things to be looking at here from the bearish side. The bullish case is that they start printing money at some point. The problem is, even if we're not going to go into a traditional 70% bear market, if they take a little while to start printing money, and you have to understand, they could even say they're going to print money, and then they come out and they say they're delaying it, right? It's not a guarantee exactly when they're going to do it, and, the charts would still be pointing, even if it's not a traditional bear market, that some kind of a bigger downtrend will continue before we eventually see that stuff play out, and it would just be really funny timing to see the 2026 turn into some kind of a bear market. You're already 50% down. A lot of people would view that as a bear market in itself, maybe just a little bit more muted than the previous cycles without all the retail panic selling up here. Maybe that helps us out. But either way, right, whether it's traditional bear market or not, this chart looks bearish, and it does look like lower prices are probably going to come. The next big levels I'll be looking at is between 82,500 and 85,500. And of course, I'm not against something being different here, but I'm just going to stick to the charts. Everybody looking for the big bounces, fighting that money flow on the way down here would have been much better off looking to fade all these highs rather than trying to catch gigalongs to new all-time highs. We saw exactly what we've been looking for playing out here, and I don't say that to brag, guys. I say that to educate. Not matter what X says, what the bullish narrative is, it really does not matter. Really, in my experience, the only thing that has really mattered is the charts. It's going to be wrong once in a while, but on these big macro time frames, these are still going to be very strong signals. So don't shoot the messenger. We've been looking at this stuff. We're just looking at the information, and as soon as something changes, guys, I will keep you updated. But I wanted to drop this just to show you guys, we've seen this TA play out. We've seen this all happen before, and, everybody calling for higher prices for, whatever narrative or whatever it is, they just keep getting absolutely cooked to the downside. And if you learn how to read the charts, guys, you could at least, take that bullish information and then, weigh it against the charts and make your own informed decisions rather than just listening to someone on YouTube. And a lot of influencers, guys, even me included, I would be incentivized to just call for higher prices, right? It would be good for views. It would be good for likes. Everybody wants to hear that. But I feel a responsibility getting up here and reading the charts in an honest and transparent manner and only giving you the sentiment that the charts are saying. So the second the charts start looking up, guys, I'll be looking for the bounces. Chances are people will be feeling so much pain they won't want to believe it, but I will give you guys, as soon as something pops up, I'll keep you guys updated here on the channel. So stay strong out there, Mafia. Hopefully we can get some kind of a retracement to come out here, maybe between this golden pocket and 786. But once we lose that 786, guys, at that point, right, we're looking to take out these lows below $75,000. And if you wait until you break this level to become bearish, you've already endured a 40% correction to the downside. And that's why looking at the TA, giving the early signals up here is always going to be a better thing to do, right? Then just wait for everybody to give up, because the masses are usually late and the charts are usually going to give you those warning signs before everybody catches on. So stay strong out there, Mafia. I know this is absolutely brutal. Try not to panic too much. Hopefully we can see a retracement come in here, but I'll keep you guys updated here with the market updates. If you enjoyed this free content, please smash the like button and subscribe to the channel, guys. It helps us out greatly and we genuinely appreciate it. Thank you all for watching. That's all I got for this video. I'll see you in the next one. Frankie Candles out.
Here we go. At the top of the class on a roll, and it's time to run it up, yeah, maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah, we winning by a landslide.